Good morning, everybody, or good evening, wherever you are in the world. Welcome back to another breakdown here with the Everyday Growth Advisors pre-market. I hope you're having a good morning, evening, and hope you had a good weekend. Last week was definitely a choppy mess. The newsletter has been sent out, so we have lots of stuff to cover this morning. Let's get straight to it. As you guys know, we have a very simple procedure. Cover the macros, cover the technicals on the indices, cover all of the underlying breadth, and then we'll jump into individual charts. Go ahead, post your tickers, anything that you want me to, break down for you or chart, give you my opinions on. Go ahead, post it in the comments right now. And also make sure that you subscribe and leave a like if you can. That truly helps the stream out a lot, reach other people of like-minded mentality, and we want to help as many people as possible on their journey in trading. So we would truly appreciate it if you can help me smash that like button. And yeah, let's get to it. So from the macro standpoint, we don't have much changing over the weekend. We do have a little bit of a kind of a standoffish expectation from China, a little bit more of the COVID zero policy threatening over the weekend. I think there's some restrictions hitting Beijing. And so that's something that we are also watching. SPX is kind of range bound at this moment between 3,900 and 4,050 pretty much. So this range is what we are really watching here in order for a breakout, or we'll continue to chop in this range until we can find either bulls or bears kind of taking control of this market. So yeah, that's something that we have to definitely keep our eyes on. Heading into this week, we don't have much economic news, but remember, it is a short week. We have Thanksgiving on Thursday, and then we have pretty much a light trading day, more than likely on Friday. So that's something that we also have to keep in mind. Volatility, if any, will be squeezed into the next 3 days, and so that should be something that we have to keep in the back of our heads. Not to mention, zero-day expiries have been very, very profitable for institutions. So these intraday squeezes are going to be more violent and more, thought out. These gamma flips have been absolutely insane. In fact, on the dealer side, remember that's something that we have to also keep in mind. They've been really, really playing these gamma, flips to the vest, and not to mention that they're really killing dealers while they're doing it. So Not really much on the macro side, except for the fact that retail is actually one of the sectors that are doing well right now. Walmart and all of them have been rallying in response. Looks like so far consumers have not really been cutting back spending insane amount, but it's just something that we're keeping in mind. Uh, Of course, we'll go over the sector rotations in just a second. Let's go through SPX first here with the technical breakdown. So range bound once again, as I mentioned, we really want to see the break below 3,900. That's the key level for us to get down into and break below. That will send us bearish and down into 3840 or 3800. That's the same tune as what we've been singing last week. The bullish pivot is still 4005 or so. And then a breakout above 4040 or so will give us the upper pivot into 4150, which would be the upper for bulls to secure, which was the previous high from backs in September. So that's the upper and lower bound on SPX for this week, and what we'll be watching all week. A pullback here is necessary in order for us to continue running. Remember, the trend tends to flip bullish in this few months of the year. However, now midterms are over, and so we might see the market start to see bunny ears on everything. And once consensus flips bullish, everything starts to flip bullish at the same time. That's just the way the stock market goes, right? Of course, nothing on the fundamental side has improved, so we shouldn't be quick to assume anything. If anything, we have to be extra cautious heading into this week and the weeks beyond, because these squeezes have been very, very relentless. On the Nasdaq, though, we have obviously the same story but a different view. The bullish pivots have not even been tested yet. The bearish pivots are still in play here. We're just sitting in the middle, chopping at 11,670. This is the upward bound of this downward descending channel that we're seeing. And at the same time, this is a confirmation level for a bullish possible extension. So this is a very, very key spot here, and that's the reason why the name of today's stream is Coin Flips Bullish Scenario, because whatever the Nasdaq chooses to do here is where we're going to end up at the end of the week or into the next 1 to 2 weeks. So, and I don't really know if we're going to resolve that right away, but as of right now, obviously the valuations or the expectations for the Nasdaq to improve here are not becoming a whole lot better just yet. In fact, if anything, the valuations are under pressure. Why? Because the dollar is starting to rally here and has been rallying a little bit pre-market. As I mentioned, 108 being a key level for the dollar for retest, which already we're retesting. And now next up will be 109.50 if we get that breakout and continued kind of pullback here on the dollar on its way further down. So, we need to look for clues from the dollar and also look for the clues from the bond market. Bond market is still trading at the key pivot at 101.49, and I don't see any long-term exposure being taken in the bond market just yet, so we're not really seeing any fundamental or substantial shift in the macro standpoint in the bonds. Therefore, we continue to see this market as a temporary opportunity for possible upside. If we get it, only would be a break above 101.50 and then a bounce on that level. So we need to wait for that breakout and then further confirmation, which we have not got yet. So therefore, we can't make any obvious changes in terms of, or any obvious predictions in terms of what we're expecting here with credit markets. What's the bond market ticker you're looking there? TLT. Here, you can see it in the background. TLT. This is the weekly chart. The reason why we look at TLT, we could also look at TLH, of course. We look at TLT as a proxy into the bond market because we want to see the more sensitive part of the bond market react to favorable conditions. So remember, TLT is the 20-plus year bonds. This tracks the 20-plus year of the treasury bonds, which are more sensitive to interest rate changes, rather than TLH, which is the 10-year bond, 10 to 20-year bond, which is a little less sensitive to interest changes. This is the medium-term bond. This is the long-term bond ETF. So we want to track the right side of the bond market, or the right tail of the bond market, because this side of the bond market is more sensitive to interest rate changes because they are long maturity, and long-term bond holders always command a higher rate of interest to hold, right? If you were holding an instrument for a longer period of time, you would want higher interest on it. So therefore, we always track the fatter tail of the bond market so we can see how sensitive it is to interest rate changes or the expectation of interest rate changes. The short-term bonds, like the 2-year or the 1-year, which are notes, they're a little more sensitive to short-term interest rate changes, but these are more sensitive to the longer expectations. So therefore, this gives you a better view on where credit markets are forecasting the market in the long term. So that's why we track the long-term bond market, or 20 plus year, or even 10 year. So TLH, TLT should be your go-to when you're tracking the bond market. Medium term, long term, that's where we should be looking at for clues. And right now, we don't see any exposure taking out, outright exposure taken to the upside, but we do see some short covering, and then we need to see if supply is indeed going to be higher here, because remember, the Fed is still going to continue its Fed runoff on the balance sheet, and the balance sheet has continued to sell bonds into the next foreseeable future, so we don't see anything improving on that front yet. Okay, so not to mention, we have the VIX still hovering around 23.88. Remember, the next pivot here is going to be 21 or 26. And those two are going to be upper bound, lower bound on VIX. That will give us the direction for the next couple of weeks. If the market moves, we are obviously coiling here. And we're coiling into a very tight move on SPX. And remember that the VIX is the out of money measure of volatility in the S&P 500 futures, not the S&P 500. Don't get that twisted. A lot of people get that wrong, and they always say, well, the S&P 500 is moving. Why is the VIX not moving? It's not the S&P 500 that is to move. It is the S&P 500 futures. People have to take out the money hedges here, down or up. And the more out the money, or the more erratic or extreme the betting on either side, that's when the VIX starts to rise. Okay, so hedges or anything like that don't really play into the VIX that easily, because even though we see there's a higher put to call ratio, remember that the VIX doesn't just track put to call ratios, it tracks the out the money volatility. Okay, so always keep that in the back of your head when you're looking at the VIX. It's easy to get that wrong, and if you don't know what the VIX is based on the CBOE, then you should do some research, do some studying on what this actually is, because a lot of people think VIX goes up means bearish, VIX goes down means bullish. In a very loose sense, that's what it means, but you can get intraday pops on the VIX based on the exposure taken on the S&P 500 futures, okay, which is ES mini. Okay, so now we get into the granular view here in the stock market and look at individual stocks. And once again, thank you very much for attending this live stream. Hope you guys are having a good morning. Once again, make sure you hit that subscribe and also the like button if you're here. It truly helps me to get the stream out to more people, and I really appreciate you guys taking your time out. Okay, so let's look at the usual suspects. Tesla, some of the famous ones, right? And I'm going to get to the tickers in the comments as well. Tesla with the gap down, so that's the first one we want to discuss here. Now, interesting thing here is that I just posted something on the Discord for our members. Now, Tesla, we saw some open interest changes just this morning, so this is a freebie for you guys. Obviously, I don't really post this information anywhere on social media because this is premium information, but you can see that we have this 15,200 increase in open interest on the Tesla, 1125 weekly, so this weekly, expiries on 190 calls, and then also on top of that we have the Tesla 200 calls for the same expiry being bought last week on the ask side. You can see they hit the ask, so those are likely to be sweeps. This was also a sweep on the ask side, so majority of it dominating on the ask side. This makes it less likely to be a bid side order, which means it's likely and unlikely to be a sold order. This is likely to be a brokered order of some kind, or either a sweep that was pretty much taken in a very quick concession on Friday. Okay, so open interest change from Friday to Monday. We can see these are all the top on open interest changes. They're betting on Nikola puts, all of these Siri, whatever, AT&T calls, Apple puts. So this is a little conflicting too, because you have Apple puts coming in, but remember that these are for June 2023, right? And then you have a whole bunch of other small caps. I wouldn't look too much into these small caps. Don't bother with them. Remember, below 10 billion market cap, avoid those. You don't want to get yourself in that mess. Okay. Intel, somebody's playing a straddle here, possibly an earnings play or something like that. There's both $30 call and $30 put. This is the outright straddle play, right? Yeah, so those are the main ones. And then you have some also Amazon. Check that out. Amazon January straddle, $90 put and call being played as well. So those are a few things that are kind of standing out to us this morning in the open interest changes, and that's a couple things that we always watch out for. Okay. Now Tesla. So talking about Tesla here. Now it doesn't mean that we don't get bearish move on Tesla. That can happen, but I think that this move down might be a fake out, and then maybe halfway through the move down, you want to watch for that intraday squeeze to the upside. Remember that when something gets, Tesla never moves down in a straight line like that. It always squeezes and then moves further down, and then squeezes and then moves further down. That's the way it usually goes. So, if this happens to be a squeeze, 190 and 200 calls would pay, that would be the retest level for the intraday squeeze before the next fall. So I think for Tesla bears, you might want to hold off taking downside exposure just yet and wait for more confirmation upon more rejections. Of course, if you get 175, your market opens and we drop all the way down to 160, then you just ignore the 190 calls and the 200 calls that are weekly expiry. But as I said, I don't think that's a likely possibility because the SPX is also possibly setting up for a squeeze here heading into the market open. So you have to be really cautious this week because it's a coin flip week. It's not really something where you can predict, are we going up or down? We're in a range, we're coiling. There's a volatility that's kind of skewed on one direction, so we have to take it based on the pivot points. Okay. Now let's look at it next. Let's see here. About Disney, I think that obviously still this continues to be in a bearish trend, and this retest here is good for us to possibly take a bearish position when we get the opportunity. If we do, let's have it go and retest 107 or 108 if it can. If it gets rejected at 102, then that's your bearish entry back into the 90s. That's what I would say with Disney. Personally, I wouldn't like playing this. I just don't like the setup. Not until it breaks out, I will let it consolidate further. Baba gap down because of Beijing news. So I personally also wouldn't. I'm gonna hold off playing Chinese equity, even though there is long-term opportunity here. I want to wait for more confirmation. Baba to continue bouncing and showing us some more strength. Then only will I play Chinese equities. As of this week, I'll wait for those opportunities patiently and let those trades come to me. Snow gap fill below. Let's see. Oh yeah, okay. So this is a nice setup. So this is nice. So thanks for bringing this to my attention. This is a nice one. Definitely looks shortable for sure. But just be careful. This is looking like it's in a megaphone pattern. Yeah, I do like this setup. I think below 140, it should be a good short into the gap fill down to the 120 or 129 level. So I think that's a good one to play. Snow looks good. I like this setup. Downtrend, very nice, strong. Looking to complete the wave down and go further beyond there. It could also get down to 112 if it really starts to get bearish. So wait for that breakdown below 130, 140. 139 or 140 to get that entry. If you want to enter short here, you can. Keep your stop loss tight and go for it if you wanted to do that. That's also a possible play. You can take it. Lulu. Okay. Let's have a look. Lulu for a potential pullback and then the breakout. This one is in a very big wedge here. So yeah, this one looks also pretty decent at the open. I think a pullback and onto 337 or 335, might be a good one to play to the upside. We'll have to wait for Lulu to come down, establish higher demand here, and then we can play this to the upside. So I think this one needs more time to marinate, but I want to see what it comes down to do around 335 or 333. We can always revisit this when it starts to come down there and then make a decision from there. So this one's still a marinate. I don't think it's actionable just yet. Obviously, we posted a whole bunch of tickers on the snipe list, so I'm going to go ahead and cut this stream as short as possible so that I can start trading with my team. I appreciate you guys tuning in. Once again, if you enjoyed it, smash the like button. Appreciate you guys taking time out to be here, and I wish you guys a great trading day, and I will see you guys on Wednesday once again. Peace, guys.